Exxon Mobil shares are trading higher right now following the company's quarterly report. Earnings of 73 cents a share, beat expectations of 66, but it did include a 12-cent benefit from tax changes. Brian Sullivan covers the oil sector for us. Brian, it was down.
You figure it out.
Yeah, but it was down. I mean, it could be a rebound today from yesterday as oil rebounds, or it could be that the 12 cents was,
maybe some analysts figured it out,
so,
some
didn't. Whatever you say, no one's going to be able to prove you wrong.
There's a dirty secret in television, in business news. I heard you all talking about it in the commercial break, because that's what we do. Don't look at the EPS number, right? Look at the top line number. I think Becky was saying that, because EPS, you got the tax benefits, you got share buybacks. On that basis, yeah, ExxonMobil beat an EPS basis. Revenue, by the way, not bad, $1.5 billion more than the consensus forecast. Still, though, it's going to be a decent story today. We're up 2.3%. But, I mean, guys, this is a one-month chart. Look at that. Even with the gain that we're seeing here, we're still a couple of bucks off. And by the way, Exxon is about the best performing major oil company of the last couple of months, and it's well underperformed the S&P 500. Okay, oil yesterday down nearly 8%, cratered, worst day in a year. By the way, I know it didn't get a lot of attention because so much was going on. Look at the one day. This is yesterday. These are some of the higher cost oil producers. Whiting Petroleum, this is yesterday's decline, guys. Whiting Petroleum down 38%, Concho 22%, Oasis 13%. These are mid-majors. These aren't tiny little companies, although they certainly got smaller yesterday, but those are one-day drops. The XOP, which is the biggest ETF, I mean, that's got Exxon in it. Look at that. Well, up right now 1%, but look at this drop yesterday. That's where we saw that tariff tweet, and then it was just kind of a continued slide down. Here's the stat of the day. Call it the RBI. The average return of a company operating in the Permian Basin, guys, over the last 12 months is a loss of 45%. In the past month, 30 days, 22 stocks in the oil patch are down 20% or more. These companies, if many of them struggle, guys, or go away, I know it's Jobs Friday, there are millions of jobs in oil and gas. If oil continues to weaken up, guys, I'm not sure what's going to happen with the job market. Look at that. Negative 43%. For every company on average operating in the red-hot Permian Basin. And don't tell anybody, Andrew, but there's a lot of debt in these companies as well. The oil story really is a debt story.
It's always been a debt story. Brian, thank you for that. And this goes to the point that Steve Leishman was making earlier about job losses and what that could ultimately mean and the effect on the elections and everything else.